Welcome back. Now we are awaiting breaking news. The September core personal consumption expenditures price index is out in about 5 minutes time. We are expecting a rise of 0.5% month over month and a gain of 5.2% year over year ahead of the midterm elections and the November Federal Reserve meeting, which happens next week on Tuesday and Wednesday. Joining us right now to break it all down is Janney Montgomery Scott's chief investment strategist, Mark Lucchini, Georgia Congressman and House Energy and Commerce Committee member, Earl Buddy Carter, Chairman and CEO of Red Apple Group, United Refining Companies, Gristedes and D'Agostino's Supermarkets, John Catsimatidis, and the Witkoff Group's Chairman and CEO, Steve Witkoff. Also, of course, joining the conversation all morning long this morning is Dagen McDowell and John Lonsky. Great to see everybody this morning. Thank you so much for joining me. John Catsimatidis, I want to kick this off with you. The last time I spoke with you, you said you did not think inflation had peaked. You were right, spot on. What are you expecting from this report? And is there any evidence from your standpoint that we are seeing a peaking out of inflation?
At this point, I don't think there's a peaking out yet. I think the prices have become erratic, and the prices are going to continue to rise because the CEOs don't really know what to do. There's what happened with crude oil going from 76 back up to 100, back down to 90. There's such erratic pricing in that market that's creating that same erratic pricing in food and everything else.
And, of course, it's the reason that the Fed has been raising rates aggressively. Mark Lucchini, the Fed meetings next week, Tuesday and Wednesday. What is your expectation? And I guess I also want to get your take on energy. John just mentioned energy. That's been the place to be if you wanted to invest in stocks over the last year. We had some blockbuster earnings from Chevron and Exxon this morning. Those stocks are higher. Your thoughts?
Well, clearly on a sectoral perspective, Maria, energy has been the place to be, and it actually has been for a couple of years now, and we expect it to continue to be. I mean, obviously, profits are flowing into the energy sector companies, unlike anything we've seen over the last certainly 5 years or so, and as a consequence, even though it's a cyclical sector that you would otherwise expect to be facing headwinds into a slowing economic environment, is one we think continues to have more upside. But having said that, on the inflation front, certainly there is reason to believe that perhaps some disinflation is in the pipeline. If you look at wages are starting to decelerate somewhat. You look at delivery times for goods starting to pick up. If you look at other measures of pricing inputs across surveys of companies big to small, they're all showing that prices are beginning to recede. It just hasn't necessarily emerged in any of the inflation statistics, and hopefully today will provide one in which I don't expect we're going to see significantly lower inflation, but anything that would suggest it's beginning to at least stabilize, if not offer some hope that it's trending lower, will hopefully give us a reason to think that the Federal Reserve may begin to, if you will, step down their activities so they don't cause a self-inflicted recession, which at this point perhaps isn't inevitable, but seems highly probable.
Yeah. Well, we'll see. Dagen, we're less than a minute away from these numbers. What's most important in this report to focus on, Dagen?
I will quote Nick Timrose. We're going to look at the employment cost index. That's the most important data point we're going to get today that the Federal Reserve looks at. And I will also note that the likes of Senator John Hickenlooper and Sherrod Brown are putting out letters calling on the Federal Reserve to stop raising interest rates and take a pause because it hurts their party politically. Let's be clear.
So now they're trying to get the Fed to stop raising rates because they recognize that the 40-year high inflation that got us here is the issue that the Fed has to try to reverse.
Right.
We got a market that is lower going into this number. Employment cost index is what Dagen said we should be looking at. We're going to be focused on that, along with the overall PCE index. Let's get to Cheryl Casoni. She's waiting on these numbers. Crossing now. Cheryl.
I'm going to give Dagen the employment cost index. Dagen, it came in at 1.2%. That was actually in line. I just want to throw that out to you because you were just talking about it. Spending coming in at 0.6%. This is consumption and index. Coming in, PCE price index 0.3 month over month, 6.2% year over year, 0.5% coming in line month to month, core year over year, the estimate 5.2%. Core coming in 5.1%. So these are kind of in line, everybody, basically. Let me go through and give you every single number again. Let's go back to that employment cost index again. Coming in line, Dagan, to your point, that was very important. That came in line at 1.2%. That's the third quarter. So that's the entire 3-month picture. They also revised spending for August to 0.6% from 0.4%. That's crossing right now as well. Now, go back to consumption and spending. The estimate was 0.4%. We came in at 0.6%. You could say that that is what consumers are paying for. They're paying higher prices. So you could actually say that's really an inflation story, and that's not really a good thing that it came in stronger than expected, that 0.6%. That is for consumption and spending. Again, this is for the month of September. Income's coming in a little bit better than expected. We did come in for September. We came in at 0.4%. The estimate was 0.3%. Now once again, let's go through PCE price index to be clear on these numbers. We came in at 0.3%. We didn't have an estimate. That's the headline number month over month. We did not have an estimate for annual headline number for PCE price index. We came in at 6.2%, which I got to tell you guys, that's actually still a really strong number. And that's actually what we had the month prior. So inflation, the PCE price index headline number year over year hasn't changed, hasn't gotten worse, hasn't gotten any better over the last 2 months, to be clear here. Now, going back to that core number, here's the Fed story, everybody. That core PCE month to month for September, a gain of 0.5%. That is in line with expectations. And then year over year, 5.1%. Expectation was 5.2%. So again, these are the numbers that are crossing. I'm going to dig into the government report, send it back to everybody for reaction. But really quick, wages and salaries for the third quarter. This is going back to that employment report. 1.3%. Wages and salaries, you think with inflation headline like the CPI at 8+%, Maria, you would like to see that a little bit higher, but it's not. I'm going to dig in these numbers. I'll send it back to you.
A market losing some steam here on this report. We have a market that is mixed with the Dow Industrials up 74 and the NASDAQ down 80. John Lonsky, how do you read this PCE and employment cost index story?
Well, the bad news is we had an increase by the annual rate of core PCE price index inflation. That went up from 4.9% in August, 5.1% in the month of September. I mean, that would favor higher interest rates going forward. We also may want to take a look at consumer spending that came in kind of strong, 0.6% before inflation. After we take out that 0.3% monthly increase by the PCE price index inflation, real consumer spending's up 0.3%. So we're going to have a pretty nice base for fourth quarter real consumer spending, unless holiday sales, fall apart completely in the months of November and December.
Yeah, and that is what, of course, is bothering Amazon investors this morning, because Amazon, in its quarterly report last night, said that they are worried about the upcoming holiday season, and that's why that stock is down in the double digits this morning. Congressman Earl Buddy Carter, it's good to see you joining the conversation here. I want to get your take on why Joe Biden seems to believe that wages are growing faster than inflation. We've got the latest inflation numbers here, and once again, we see high numbers, and wages are in line. Wages overall are growing 5%, while the consumer price index is up 8.5% or 8.2%. We are still seeing inflation cut into our wages. It feels like the president doesn't understand that.
Absolutely, he does not understand it. And inflation has gone up in the 18 months that he's been in office. It's gone up every month more than wages have. And that's bothersome. As I go through the district, people are telling me, first of all, we're having trouble finding workers. Keep in mind, I represent the entire coast of Georgia. We're heavy in tourism. That's very labor intensive. Employers need help and they need workers. That's a big problem here. And they're having to pay more. And it's somewhat ironic that we're celebrating in a way the stability of these high numbers. At least it didn't go up. Inflation is still at 8.2%. Keep in mind, when he took office at 1.4%, and we're supposed to be happy that It seems like it's leveling off now.
Yeah, we got the timeline on inflation, and you are spot on. When the president walked into the Oval Office in January of 2021, The CPI was at 1.4%. It was not a problem. That's when wages were growing faster than actual inflation. Steve Witkoff, what does all of this mean to your business in real estate when you look at labor shortages and the employment costs? Is this an issue in housing and real estate the way it is everywhere else?
It is a large issue, Maria. You know, we entered this inflationary period with a housing shortage across the United States. And so, again, that's the story of what this inflation problem is all about. It's all about less supply and a ton of demand because a lot of money got thrown at the American public. And that's the same thing in with the energy crisis as well. We had an independent energy program in this country, and we gave it away. The Saudis talked about it this past week at their investment conference. They said pointedly, why don't you start pumping more oil in the United States? And we just can't seem to get across that barrier. Well, it's the same thing in the real estate business. Housing prices are high, rental prices are high, and yet there's an overwhelming shortage of inventory, and we're not solving anything by stopping the build process. And high interest rates stop the build process. And this is the part that the American public doesn't understand. The spinmeisters term it a certain way. You talked about our current president talking about wages going up, but they still don't go up at the same pace of inflation. I think the American public is beginning to understand that leadership matters out there, and it's, in my view at least, woefully inadequate.
Yeah, and Dagan, I'm really glad that Steve brings up this point of supply. We talk about the demand part of this economy all the time, but we need more supplies. We need companies to make more stuff. And that's not happening when you have the lead guy in the White House attacking companies, everybody from the meat companies to the oil companies to the candy companies. He's trying to blame everybody else on higher prices, and it has put a damper on supply and production, which is what we need right now.
Right, and this can happen on the supply side by itself, even without the vilification coming from the White House and Joe Biden himself. Because when we talk about CEOs warning about a recession next year, we've already seen layoffs, real hiring freezes at major companies. What that does is it constricts supply potentially, and also hurting supply would be the regulations coming out of the White House, the new minimum tax on corporations. So you have supplies tightening, but you still have money flowing from government spending into the hands of consumers. Remember, that moratorium on making student loan payments runs through at least the end of this year. So that actually creates a scenario where inflation continues to get worse. And inflation, to John Lonsky's point, with the core PCE, it's picking up steam from the annual at 5.1% from 4.9. Now, that is not at the high it was earlier this year. In February, is at 5.4, but you still have it picking up steam. And at the same time, these Democrat senators do not want the Federal Reserve to fight this very inflation. John Hickenlooper has the, I would say, audacity, but I think it's real idiocy to write to the Federal Reserve. Here's in part of what he wrote in this letter to Jay Powell. It's paramount that we keep energy costs, grocery bills, and every other day prices low. But this is why Congress passed, among other pieces of legislation, the Inflation Reduction Act and the CHIPS bill. These long overdue investments is code for spending will lower the cost of health care and prescription drugs and energy. They're saying we needed to spend money to lower cost. These individuals are real. They're cornering the market on moronicy.
Yeah. I mean, how has all that spending worked out, John Catsimatidis?
Well, I think it hasn't worked out at all. You don't see anything being accomplished with all that spending. But my opinion is that Washington should take a break. We have 10 days to the election, and we're going to see which way our country is going in 10 days. And the leadership in Washington has made every decision they have made in Washington in the last 18 months has just been all wrong. And I think the country is looking for which direction are we going to go on after Election Day.
So, Mark Lucchini, that's a question for you. Will the midterm elections be a catalyst, you think, for the stock market? I mean, I know that usually Wall Street likes to see divided government because it means nothing gets done. What's your take on the midterms in 11 days and how that affects markets and the economy?
Well, Maria, I think you said it exactly, and that is, if nothing else, if by chance the Republicans take either side of Congress or even sweep congressional seats to take over the House and Senate, the market at a minimum would look at gridlock favorably. On the other hand, I think there's also a chance that the market, even though at this point in time it seems by services like Predictit and so on, the odds do favor at least the House being taken over by the Republicans, that perhaps a fair amount of that's already baked into the market. So I think net the odds are that if we do see an outcome that leans into where certain surveys and the Predictits of the world are indicating, that I think the market is looking for something to catalyze a move higher beyond, obviously, the Fed pivot, which it's already moved on. And these inflationary numbers that we got today isn't necessarily going to do anything to deter the Federal Reserve from continuing on its rate hike campaign, particularly on that core PCE number, which came in at 0.5%, which annualizes, of course, at 6% if one were to extrapolate out, which is a far cry from what the Fed is trying to achieve. So the election outcome, I think, could be a potential influential factor, building on the seasonality and the nature of the market to try to trend higher into year end.
Yeah, so Congressman Buddy Carter, what can the Republicans do about this?
Well, first of all, Maria, a couple of things here. Earlier we were talking about the housing market. That is extremely important. And I'm glad that's being pointed out here because, this week we had the largest economic development project ever in the state of Georgia. We had the groundbreaking on it, an electric vehicle plant being built by Hyundai in my district, in the 1st Congressional District, going to create 8,100 jobs, a $5.5 billion investment. But our concern is we don't have the supply of housing here. That's a big problem. Is the supply. And you're absolutely right. What is inflation? It's nothing more than too many dollars chasing after too few products. Also, it was mentioned about health insurance and how much it's gone up. It's gone up more in the last year since the early 1990s. And it is going up. And that's the problem right now. But I beg to differ, with all due respect, about divided government. I would submit that in many cases, a divided government works better. Look at the situation with Ronald Reagan and Tip O'Neill, with Bill Clinton and Newt Gingrich. I would submit that they got some good things done. So if we can get this president to work with us, because we're going to take over the House, we being Republicans, we're going to take over the House and the Senate. If he will work with us, I think we can get some things done.
What do you want to get done?
What I want to get done is to stop the spending. Stop the spending and unleash American energy. The growth in the GDP this time was largely due to American energy exports. And we know that this president is going to try to crush that and stop that. But if we can unleash American energy, 3 things we have to do: stop the spending, unleash American energy, and do something about the regulations. And they are killing us and crushing us right now.
Yeah, I remember Steve Witkoff when President Trump cut regulations. He came out with all great fanfare with stacks and stacks of paper and a red ribbon, and he cut it and said, deregulation can be beautiful. Steve, as a businessman, what do you want to see get done should the Republicans take the majority in 11 days? What is important from a business standpoint that gets done?
He doesn't get enough credit, Maria, for being the greatest anti-regulation president that this country has ever seen. It was Those executive orders were incredible. You can look at the housing industry, which I understand, it's my business. It's the same principles in the energy business. When you regulate, and there's one party believes in regulation, rent controls and so forth. Another party believes in inventory. More inventory, more choices, it means prices come down. You look at NIMBYism in New York and San Francisco, where everybody becomes a preservationist just to protect their views and do not care about what the pricing goes to. It's the same thing in the energy business. I don't believe that any climate change person can today give accurate numbers on how much in renewable we need before we turn off the independent energy program that we had in this country under President Trump. And that's the problem. Yep. We regulate too much, and we need to change that.
Dagan.
Congressman, I want to ask you something, though, that all government seems to be the problem, because you were just talking about this electric vehicle plant that was built in Georgia. But again, these electric vehicles get massive subsidies from the federal government. And those jobs wouldn't be there if not for government spending and subsidy. So I think the American people at this point just want government to get out of the way. So would you ever, in your future as a congressman, back taking away those electric vehicle subsidies?
Oh, absolutely. Subsidies are not the way to go, and I don't agree with that. But keep in mind now, first of all, this was the groundbreaking for a new plant that should be completed by 2025. And when you talk about those subsidies, South Korea, the home country of Hyundai, they were left out of that. So they won't be eligible for those, which is jeopardizing this project. Another example of the short-sightedness of the Inflation Reduction Act, which did not include our allies who we need to be building these products, who are investing $5.5 billion in this country, and now that project is being jeopardized because they weren't included in these subsidies. You're right. I don't agree with subsidies. I don't think I'm a free market person, but at the same time, to jeopardize a project, the largest economic development project ever in the state of Georgia, that's just ridiculous.
Now, Cheryl, I think you've got more info on all of this breaking news. Markets have come completely off of the highs and are now negative. I saw these reports as negative, and that's why I was surprised to see a rally, and it has reversed.
It certainly has, because now traders are going through the report, which is what I've been doing to kind of get to the nitty-gritty. There's a couple of really disturbing things within the report. First off, the personal savings rate, which is something that Mark Tepper and I were talking about a couple of days ago. It actually has fallen again month to month. Personal savings rates, that's now at 3.1%. It was at 3.4% just a month ago. So Americans are saving less. Then you look at, let's remember, the spending number jumped month to month to 0.6%. So Americans, to the congressman's point in his district, you are spending more, you are saving less. The other issue that's kind of a problem in this report, this goes down to the third quarter employment cost data. Even though that number was the same month to month, I mean, not the same, in line with analysts' expectations, the annualized number is getting a lot of chatter right now on the message boards. It was a 5% jump year over year. So all of these points together, you look at the consumer, you look at the economy, and then you look at what the Fed's going to do based on that core PCE number, and the markets are reacting. That's why.
Yeah, well, we continue to see inflation elevated. John Catsimatidis, as you predicted months ago that you were not seeing anything change in terms of inflation. You're focused on the energy business as well, John. Tell me about the status there, as energy has been one of the best places to be for an investor this year.
Well, for investors, it's a great place to be. Nobody has ever made money on wind energy. Nobody has ever made money on solar energy. Maria, it's all a bunch of crap. I mean, the only place anybody's made money is fossil fuels, and in the future, I think our country has to go forward with real energy. Our country is very, very rich in North America with oil. And we're at the lowest point of pumping out oil that we've ever been. America has to be independent. And if we don't go forward with independence on our oil business, our country is in deep doo-doo, and we have to go forward, and we have to open up the fields. Alaska, Canada.
Well, I think the point is that we all want a clean economy and a green economy where we have fresh air and clean water, but they want to jam this climate change agenda in as if it's going to do away with fossil fuels overnight. Obviously, it's a process to have any kind of a transition, John, but what you're saying is we should not be turning our backs on fossil fuel.
Absolutely not. And if we don't fix that problem right now, I think the leadership in Washington has to take a pause. We're going to create a bigger problem by increasing interest rates to a degree where we're going to put the rest of the country out of business. And instead of fixing the problem, we're creating a new problem. And that's not the way to run a country.
Well, what gets me mostly, John Lansky, is the misinformation that the president has to attack Donald Trump and the Trump policies every time he tries to explain away his own policies. Walk us through this report this morning, the September PCE price index, and why you think this market is showing declines across the board.
Well, it's that increase by core PCE price index inflation that excludes food and energy from the prior month. I think that's disruptive to the market. And, I want to add, too, that when we look at these reports, quarterly earnings reports from businesses, far too often I find that their revenue growth is mostly the consequence of price hikes that have compensated for reductions in unit sales or sales volumes. And I think, that is an unsustainable source of growth. Price hikes while unit sales are falling. At some point, that drop in unit sales leads to layoffs. And with that, we get a deep decline by consumer spending. That very low personal savings rate is troubling, only 3.1%. That tells us that the buffer that might help hold up consumer spending in the event of more layoffs is dwindling. So we could be in for a harsh correction as far as consumer spending is concerned. And I'm just curious, John Castellittis, because he has a lot of exposure to the food store industry, whether or not he's seeing notable changes in consumer buying habits in response to ever-increasing prices.
John.
Well, I believe that, turkey prices are going to be the highest ever in history. So that's going to tell us the rest of the country has 70% increases in turkey prices. New York City, we got lucky, is only about 40% price increases. And that's going to be a sign of selling out this Thanksgiving or not selling out. There's word is that a lot of people are not going to celebrate Thanksgiving. I bet they will celebrate it. People don't want this recession. They want to experience America as America. Let's not force this country into a recession, and that's what Washington is doing. They want to force our country into a recession, and Americans do not want a recession.
Well, Mark, it is going to be a very expensive Thanksgiving. We know that. Tell us what you see in terms of the macro story and how things play out. If we have a sticker shock of a Thanksgiving, does that put a damper on spending going into Christmas?
Oh, undoubtedly, Maria. I mean, speaking of, for instance, yesterday's GDP number, got a lot of attention on headline of 2.6%, which basically just recovered in terms of total economic output in dollars, what was lost over the first half. And as the other individual had mentioned, largely attributed to export-related activity. If you look inside the number at domestic sales to private individuals, that number was just 0.5%, which is particularly anemic when you consider the fact that on a pre-pandemic basis, the 5-year moving average of that number was about a positive 2.6%. 6%. So it's indicative of the fact that the consumer is, in fact, being pinched. And as a consequence, we're seeing numbers that obviously are showing up by way of real wages that are negative on about a 3% annualized basis. We're seeing a drawdown in the savings rate that was mentioned to 3.1%. We're seeing the overabundance of savings that accumulated because of people not being able to spend outside their homes or by way of the fiscal response to the pandemic starting to evaporate. And so collectively, I think the setup here is the prices going into Thanksgiving, which had already been foreshadowed by some of these retail numbers, particularly by Amazon yesterday, perhaps are indicative of a holiday sales season that's going to be disappointing.
I just want to report this breaking news that we are learning that Nancy Pelosi's husband has been hospitalized after being attacked at his home. Pelosi was violently attacked at his San Francisco home early this morning, according to a spokesperson for the House Speaker. The assailant is in custody right now, and the motivation of the attack is being investigated. The Speaker was not in San Francisco at the time, but again, Paul Pelosi, Nancy's husband, has been hospitalized after this assault. It raises the issue of crime, Dagen McDowell. Many of the Democrats who have wanted to defund the police are actually experiencing firsthand the effects of it.
Crime is the second, based on much polling, including the Fox News polls, next to inflation. Crime is the second issue that is most on the minds of Americans. And with the impeachment moving ahead of, say, in Philadelphia, of Larry Krasner there, I just want to remind people, Larry Krasner blamed essentially racism. That if you criticize a city and the crime, it's racist messaging from Republicans. So is he when the people who are hardest hit by, say, gun crime in Philadelphia are people of color? So are people of color racist because they care about their own safety and security? And then Kathy Hochul trying to flood the zone with transit cops here in New York City is embarrassing, as she herself has stood up for this bail reform and putting violent criminals right back out on the street. We'll see. But all of this goes together, because the worse the inflation, the harder the economy is hit, then these areas that are plagued by crime also continue to suffer, and it becomes a downward spiral.
That's right. And voters are taking notice, Buddy Carter. I think that's one of the reasons that Lee Zeldin is closing in on Kathy Hochul in New York, because of the spikes in crime.
Absolutely. Look, first of all, thoughts and prayers to Paul Pelosi. Secondly, yes, Dagen is absolutely correct. As I'm in the district, the number one issue, inflation, overwhelming in inflation. Second, crime. Third, drugs, the southern border. Fourth, education. That's it. That's what people are talking about in my district and throughout America. And that's going to be the determining factor in 10 days when we have the next midterm elections.
Steve Witkoff, are you seeing that in real estate and housing as well? How pervasive is the crime issue in your standpoint?
I think it is the critical issue. Ray Kelly said it best. He said, "Why reinvent the wheel? Let's go back to the days of my policies, Bratton's policies, Bernie Kerrick's policies." New York had a renaissance when Rudy Giuliani first became mayor, and it continued through the Bloomberg years. And that's because crime was brought down and New York was perceived as a really livable city. And I'm living in Miami now, Maria. This is a relatively crime-free environment. The police are out. The citizenry respects the police. Same thing in Kentucky, another home where I live. But in New York, it's different, and it's sad. It needs to change.
Yeah, it's true. We had the mayor of Miami, Francis Suarez, on this week to talk about how Miami is different than the rest of the country. Real quick, Mark Lucchini, close us out here. Market is mixed on the heels of this economic data. What do you look for as most important next week?
Well, obviously, the Federal Reserve meeting, Maria. I mean, obviously, the Fed's reaction function to this most recent inflation reading on PCE is going to drive, I think, investors' attitudes around whether the pivot is on the table or is it going to be taken away next Wednesday when we get the announcement.
All right.
Right.
Thanks, everybody. Great panel. Have a wonderful weekend, and we'll see you again on Monday.